Hello and welcome to Morning Trade on Moneycontrol. I'm Stacy Pereira, and let me take this opportunity to wish all of our viewers a very happy and prosperous New Year 2024. Well, let's get straight to it and let me help you navigate this trading day. Not too many markets are open across Asia at least, but we are going to see what we're getting from the Nifty and the Sensex back home here. So we have some actionable trading strategies, the sectoral trends that you need to keep in mind when you start trading this new year, and more importantly, all of your queries during the course of this show. So keep commenting on our live feed and we'll have them addressed by our guest on the show. But before bringing him on board, let's see what we're getting from our global handover and what that really looks like. Now, if you look at the stocks on Wall Street, they fell slightly on Friday, but the S&P 500 closed out 2023 with a surprising gain of about 24%. Inflation, of course, in the economy has remained that cause of concern, but the Federal Reserve signaling an end of its rate hiking campaign. And it was a big tech stocks that really lifted the Nasdaq on Wall Street to have its best year since 2020 on the back of that AI enthusiasm. If you look at Asian markets, there too we're seeing a bit of mixed trade as not too many markets are open, but you're also seeing Chinese stocks which are inching higher after the tech firms have really gained this season. You're also seeing President Xi Jinping say that China will see the reunification with Taiwan, which is inevitable. Remember, this comes less than 2 weeks to go before the Chinese claim island will elect a new leader. And 2024 will be another year of the bulls with large cap stocks set to rally. Well, that's Moneycontrol's market poll, where we asked about 35 analysts and fund managers their outlook for 2024. Most of them see the Nifty in the range of 23,000 to 25,000 by the end of 2024. That means a potential return in the range of 6 to 15%. And SEBI has gone on to penalize Unitech Advisors, which is now Aurum Asset Management, for failing to wind up 3 of its real estate funds, this happening not on time. Now, SEBI has ordered the company to immediately wind up the firms and also return to the unit holders the funds. The penalty amount is about 1 crore and the amount is to be paid jointly by its directors, Ajay and Sanjay Chandra. Well, now if you have to look at how the markets perform, we did have the bulls take a breather on that last session, we could say, on the 29th of December. But well, that momentum that we've been seeing, the rally that we've been seeing, the run-up in the previous sessions, which have been quite, considerable for the benchmarks, will that really continue as we get on into the January series? That remains to be seen. But going ahead, the Nifty 50 is expected to consolidate, we could say, getting into that strong mode after seeing some bit of correction. But overall, the bulls are still in the healthy position. So let me understand the broader fundamental picture here and how that's really going to turn out. And joining me to do that is my guest on the show, who's going to give us a little bit more sense on the broader picture, the sectors as well as the outlook. I have Trideep Bhattacharya joining me this morning. Good morning, Trideep, and wishing you a very happy new year. Let's look at the fundamental picture. We have FIIs who are kind of bringing in a comeback, we could say, of sorts, and especially into the sectors that were pretty much the non-performers for 2023. What is your outlook going into 2024? Is this really going to be a turnaround and we're going to see FIIs make that comeback in a strong way this time around?
Good morning, Stacy, and thanks for inviting me to your show and to your viewers, to your channel. Wish everyone a very happy and prosperous new year. I would say that if while FIIs are one segment of the market, I see 2024 to be basically a year of transitions. And it's important for investors to understand that as they look to trade, the year. And this will be marked by 3 key transitions, in my opinion. First of all, I think the macro debate is moving from the economics to politics. I mean, if you look at 2023, the macro debate was entirely about interest rates peaking, and overall the pace and the rate at which it will come down. But in 2024, I wanted to say that at least 50% of the top 20 nations across the globe are going through their national elections and will choose a national leader during the course of the year. You were showing the Taiwan picture. Taiwan has got elections in the first month of the year. Likewise, two biggest democracies of the world, US and India, will have elections in 2024. And not only that, UK, as we go through the year, will also have the same. So nearly about 50% of the top 20 nations choose how the politics and the geopolitics will look like for the next 4 or 5 years. So expect a fairly noisy sort of top-down year from a market standpoint. And that's something that in 2023, it was probably a little bit lesser. And hence, that's the first transition that I wanted to talk about. The second transition I would talk about is from inflation to disinflation. 2023 was all about increasing inflation and central banks kind of following the same, and towards the end looking to or talking about cutting rates at some point so that ultimately to show that inflation is finally has been tamed. Well, 2024 will see disinflation start to come through, i.e., the rate of inflation would start coming down. And hence, this will have meaningful investment implications on the asset classes that we invest in and the sectors that we invest in, and hence becomes the second big transition in 2024. The third area that I would point to is that 2024 would be the year where global growth rates bottom out. In the first year, while you would see growth rates coming down as a repercussion of the interest rate hikes that we saw in 2023, in the year 2025, we will gradually see bottoming out of global growth rates. And hence, from a portfolio construction standpoint, that will have meaningful implications from the value or growth style, and at the same time, economic recovery, which might be more global in nature. So, all in all, welcome viewers to the year of transitions.
Right. So year of transition to be looking out for, right from the shift in politics as well as interest rates, as all of that is what one needs to tread with caution, we would also say. But let's look at the technical side of things. Now, we did see some bit of consolidation take place in that first session for the January series, and let Trideep stay on with us, because we'll get into which sectors one should really be looking at this point. But let's also get into the technical charts and what those are suggesting. Now, we don't have such a good handover when it comes to the US or even Asian markets, which kind of closed a bit lower on that last session, and so did we back home here. But what are those support and resistance levels that we need to be looking out for the Nifty as well as the Bank Nifty? Because remember, we've seen quite a bit of a rally and touching those new highs, in fact, in the last week of December as well. So joining me for that is Rajesh Palviya from Axis Securities. Good morning, Rajesh, and wishing you a very happy new year to start with. But give us what you're looking at with the charts. Are we likely to see some bit of consolidation for a few sessions before we get into that momentum rally once again?
Good morning, Stacy, and wishing you and Moneycontrol team a very happy new year to all the viewers also. Looking at the overall structure for market, it's still in the bullish trajectory. Though we have seen some bit of profit taking, or we can see a breather in the previous session, but overall structure for Nifty as well as for Bank Nifty is on the bullish side. Overall, all the sectors are also contributing to this rally. So sectoral rotation is also taking place. Mid cap, small cap space is also in the bullish trajectory. So buy on dips is the clear strategy at this moment. If we talk about the levels for Nifty spot, so Nifty spot is having important support area now at around 21,600. That is important level on the downside. Until Nifty not breaks those level, I think there is no as such worry in terms of trend on the near term basis. Long term trend is there is no doubt. Long term trend is intact on the bullish side, but for near term, for day-to-day trading activity. 21,600 is the important level as of now. If we hold those levels, then again support buying is likely to be there because put writing activity is there at around 21,500, 600, even 700 strikes. So these are likely to act as a good support area in the decline. On the higher side, once we crosses about 21,850, then possibly we may see a short covering action which could take Nifty further higher towards 22,000 or further higher from the 22,000 level also. For Bank Nifty, the important support at this moment on the Bank Nifty spot, that is at around 48,000, followed by 47,900. These two levels are very important on the downside. If we hold these levels, then there is no as such worry in terms of near-term trend also. And once we crosses above 48,450 for Bank Nifty spot, then we may see a extended rally towards 48,650 to 48,800 in the continuation of this uptrend. So overall structure for both indices are looking on the positive side. Buy on dip should be your strategy.
Right. So we're still sticking with that buy on dip strategy at this point, but that is the moment we're seeing this bit of correction that will likely to stay. Do wait on. We'll answer some more queries. In fact, I'm going to take up a query, but this time with Trideep, because this seems like a little broader question that is coming in from Girish Sharma, who's asking on the quarterly earnings. But I'll look at this more from a broader perspective of the tailwinds that we have for India. Now, we've seen good macros for India, which is helping us. We are expecting those rate cuts to come from the US as well. We have auto data that will come trickling in today, and most experts are expecting a double-digit growth even in the two-wheeler segments that was, kind of slowing down all this while and not seeing that rural recovery at least. But things are turning around. So this Girish, in fact, is asking whether, this is this sufficient to really support the current market scenario, or will we have to see some change in valuations? And what's your take on how the stock market and even specific stocks are valued at this point? Or is it better to wait for some more liquidity?
Great question, I would say. And I would say something like this, that the market will be a little, from an earnings standpoint, a bit two-paced in nature. The manufacturing side of the market will actually come out in flying colors. If you look at the order wins that have come about, not only on defense, but broadly speaking, mostly from the government, infrastructure, and even from the private sector standpoint, the order booking has been pretty decent. PMI numbers have been pretty decent. And hence the numbers coming out of manufacturing-led companies would also be probably pretty decent. But on the other side, if you look at the consumption-oriented companies, I think they might report, a little bit of lack of festive cheer, if I may say so, on a broad-based basis, and hence earnings might be a little tepid as compared to expectations. While on the domestic front, this would be the scenario. The export-oriented sectors will actually kind of just about wash their face, in the sense that this is not supposed to be a meaningful quarter in the grand scheme of things, but they will just about be broadly in line. So on net balance, I think expect a fairly, in the near term, expect a fairly two-paced nature in the market, wherein we would think that stock picking or how one picks the sectors would be the key to outperformance going forward.
Right. Now, speaking of sectors, banks are the ones that didn't really perform that well, or, were among the underperformers if you look at a couple of those big banking names. But then we saw that turnaround happen in December, and we're hoping that financials will be the one that will outperform in 2024. But also, we're seeing that change happen in IT stocks. So if you have to look broadly sector-wise, Trideep, what would be the themes to be playing out? You did mention export-oriented and all, but I'm talking about specific sectors and those, indexes which will really be pushing the benchmarks forward. Which ones would that be for you?
Understood. And again, I would take the year at the same time, as opposed to taking a quarter. And I would say that while I talked about from a macro standpoint, the year of transitions, from on net balance, the read-through from the macro is that we are likely to have a fairly noisy macro coming about. And hence, focusing on sectors where they have earnings tailwinds is the way to go about it. And the places that I see earnings tailwind comes through in the 2024 are actually five, in my opinion. First, I would point to capex as a theme. With capacity utilization of India Inc. as fairly high, I would reckon that India is very close to the start and onset of a private sector driven capex cycle. Most likely, this will happen on the other side of the elections, but this has a time scale of probably kind of 2 to 3 years ahead of us, and hence that's one area which is related to industrials, cap codes, infrastructure, where I would suspect earnings are likely to be resilient. The second area that I would point to is actually the point you alluded to, financials, and more specifically lending financials, and within that NBFCs. I would say that with rates peaking and starting to come down, NBFCs would be one area which would see the light of the day, given that they benefit disproportionately as rates come down overall. This is the second area that I would point to. The third area I would talk about is power. And I'm talking about with regards to electricity and the sectors which are allied onto that. I think that overall, with very little investments that we've seen in this segment over the last 10 years, we are headed into a power deficit sort of a situation over the next 2 to 3 years. And hence, various elements of the power chain, which kind of feed off on the power deficit, i.e., have supernormal earnings on the back of this, would actually stand to benefit. This could be very well power generation companies, distribution companies, utilities, and many others who are kind of linked to power and benefit from a power deficit. That would be the third area that I would point to. The fourth area that I would talk about is real estate. In my opinion, in India, real estate is in the middle of a 5 to 7 year upcycle, wherein the first 2 to 3 years are gone. We have a good base of earnings from that coming through. And the reason why this looks resilient is housing unsold inventory are broadly at about 10-12 year low. When such a thing happens, usually with a little bit of demand uptick, you see good amount of sales come through, which is what we are seeing from builders. But this time around, even the ancillary sectors would actually stand to benefit. So net-net, real estate could be a strong area of earnings as well. And finally, I would point to IT services as the dark horse of the year, in the sense that it might start with fairly tepid numbers in the quarterlies that is expected, but through the course of the year, as we see global growth rates bottom out, I would expect IT services to gradually bottom out, and over a period of time in 2025, we would see stronger growth rates come through. So, Stacy, those would be the five sectors and areas where I would think in 2024 earnings are likely to be resilient, and hence a good place to be from investment standpoint.
Right. So earnings will be resilient, but those five sectors that Trideep mentioned, quite interesting there, because we're seeing a lot of activity in that power and infra space as well. And financials, like I said, of course, we're looking at IT to be that dark horse. But thanks so much, Trideep Bhattacharya from Edelweiss AMC, for giving us your time and speaking with us and getting our viewers up to speed with what they need to be looking out for in 2024. But let's get some more queries answered. I'm seeing Jituru Pavan, who's asking the view on KPI Green Energy as well as Vari Renewables, and he's suggesting levels that he needs to enter with. So maybe Rajesh can take that up and answer on how he's looking at KPI Green as well as the whole renewables play at this point.
So overall, structure for KPI Green is on the bullish side. A series of higher top, higher bottom formation is taking place, which clearly suggests that sustained buying is taking place. Whatever minor dips which we have witnessed in the stock, that is attract the buying interest in the minor dips also. So I think if he is holding the position, he should remain invested in the stock. We may see a furthermore higher target in the stock towards 1550, even 1600 kind of level on the positional basis. Even on the decline also, he can add furthermore on the downside towards 1400 is the major support area for near-term to short-term trend. So I think he should hold the position. Upside target we can see towards 1560, 1600 kind of level in positional basis.
Right. What about for Vari Renewables? Any suggestive levels to enter on that one?
I'm sorry, I don't have a readily available chart for that stock.
Right.
So
No worries. Okay, let's look at the other side that we've been talking about, and that being, the fact that financials are, of course, seeing that turnaround, but we are hoping that those big names like the ones of HDFC Bank, who hasn't really performed so far, among the lower return ones for 2023. Rajesh, what is your take? Do you see that there will be a turnaround, especially of the charts, and do you think the valuations are right when it comes to if you have to compare between a private and public sector bank?
So clearly, if we look at the longer term perspective, yes, there is no second option or second thought to not to buy this stock. It's a good quality stock across all parameter. And now looking at the recovery which we have witnessed in last couple of weeks, that clearly shows that now stock is poised for giving breakout of its previous swing high, or we can see a all-time high trajectory also for the HDFC Bank. On the near term to short term structure, 1760 is the immediate resistance area. If at all stock crosses above 1760, then we can see a target towards 1850, even 1900 in a positional basis. So I think those who have bought in the decline, those who have accumulated the stock in the decline, they can hold their position. Even for a new investor, it's again opportunity to buy this good quality stock. And as we are projecting, that banking and financial is likely to continue further more bullishness from the current level also, and we may see further higher targets for all the banking and financials. So HDFC is one of the bank where we like at this moment. At 1850, 1900 is the positional target for the stock. Buy on dips is the strategy. 1620 should be your stop loss to buy and accumulate this stock.
Right. In fact, since we're talking about banks, one that would be a buzz perhaps in trade today would be Karur Vysya Bank. That's because the RBI has granted its approval to ICICI AMC to acquire up to 9.95% stake in the company. And remember, ICICI will get that paid up share capital or the voting rights of Karur Vysya Bank. And this is not the first time. Back in November, we also saw SBI, a mutual fund, acquire an aggregating holding of about 9.99% in Karur Vysya Bank. So that is going to be quite interesting. But let me come back to Rajesh Palviya and ask him his take on the cement sector, because we're seeing quite a bit of, a lot of people are saying there is infrastructure that will be at play, that capex plan, and that's where we're also going to see a couple of cement names, though it is one of those themes that could really have some bit of play into an election year. But let me first tell our viewers about brokerages and what they are saying. There's a brokerage report from Motilal Oswal on Dalmia Cement, where they have put a buy call for it with a target of 2,800 per share, and this is their top pick for 2024. They're saying that there could be ambitious growth plans as well as execution, which is the focus of that optimistic, why they're optimistic about the company, and also the long-term outlook, the plans to increase capacity to about 110 to 130 MTPA, which could also really augur well. In fact, it's not just this. Overall, the cement sector, there's a report from Jefferies that had come out, which is saying that in Q3 of FY24, they are pegging the growth at about 3% on a QOQ basis, which is pretty much in line with those initial expectations. Highest growth, in fact, they are seeing in the south, which is about that same 3% levels, though they're seeing a mixed trend in December after that sub 10% YOY growth that was seen. Rajesh, maybe you want to come in and see how should one be looking, and what names within the cement sector would you really look at, or whether now is the right time or one needs to wait out for a while playing any of these bigger cement names?
Definitely. So we have seen a good run up in most of the cement stocks in recent past, and looking at the large cap stock like Ultratech, now it's enjoying its all-time high trajectory. So that clearly shows that there is a traction, and buying interest is clearly there in whole sector. We believe that Ultratech is likely to continue furthermore upside, and looking at the overall structure, we believe that these stock can scale up to the level of 11,000, even 11,200 kind of level in the continuation of this uptrend. So buy on dip should be your strategy in Ultratech. Your stop loss should be at around 10,100 kind of level for short to medium term trading perspective. From that space, the another stock that we like is ACC. If we look at the structure for ACC now, stock has shown a good recovery in last couple of weeks. After forming a bottom on the long-term chart, now stock is showing strength. And looking at the near-term structure, short-term structure, we believe that once the stock manages to cross about 2240, 2250 level, then this rally can extend towards 2350, even 2400 kind of level. Dalmia Bharat is also looking promising. Series of higher top, higher bottom formation on the daily, weekly time frame. Overall long-term structure is on the bullish side. Already consolidation activity is already done for the stock. Looking at the near-term, short-term structure, there is a recovery is taking place on the near-term structure. So we believe that once Dalmia Bharat manages to cross about 2350 level, then this rally can extend towards 2550, even 2650 kind of level in a short period of time also. So one can look at to buy and accumulate this stock also with stop loss of 2180.
Finally, since we're running out of time, quickly, Rajesh, give us your top 3 picks, stock-specific ones that you would want to give our viewers on this first trading day of 2024.
So, Stacy, we believe that automobile is the space where we could see another rally from the current level. Also, most of the stocks are in bullish trajectory. Bajaj Auto is looking promising. We are projecting target of 6900, 6950. So one can buy Bajaj Auto with stop loss of 6730. Another stock we like from the banking space, PSU, from PSU banking space, we like Punjab National Bank, PNB. Stock is forming rounding bottom formation on the weekly chart, and looking at the overall structure, we expect that this stock can exhibit furthermore upside towards 105 to 110. So one can look to buy this stock with stop loss of 91. And the third stock is from the oil and gas sector, that is GAIL. Very strong buying action in last couple of a month, and looking at the overall structure, we believe that GAIL is likely to outperform, and we could see a upside target of 175 to 180. So GAIL is a buy with stop loss of 156.
Right, so those are Rajesh's top picks. PNB, GAIL, as well as Bajaj Auto is what he has on his radar. Well, with that, it's a wrap on this edition of Morning Trade, but we'd like to wish all of our viewers once again a very happy 2024, happy new year, and a prosperous one, hopefully for all. But don't go anywhere. Coming up next is Opening Bell.